Greetings to Dr. Nelson. I am Natalie, Chong, and my group members include KENNEY, DEXTER, HAFEEZUR, and Nukman. We will present the financial performance analysis of the Naga National Berhad (TNB) from 2019 to 2023. As introduction, the Naga National Berhad, or known as TNB, is Malaysia's largest electricity provider. It's established in 1949. It serves over 9 million customers and employs more than 35,000 people. TNB's operations span power generation, which include coal, gas, hydro and solar, transmission and distribution across Malaysia, with the international ventures in Turkey, India and the UK. Guided by its purpose, together we brighten lives through innovative and sustainable solutions. TNB is focused on clean energy, aiming for 40% renewable energy in its supply mix by 2035. Thus, to evaluate TNB's financial health, we use 5 categories of financial ratios. Firstly, liquidity ratios. These measure TNB's ability to meet short-term obligations. The second ratio is capital structure ratios. This shows how TNB finances its asset through debt and equity. The third one is asset management efficiency ratios. These evaluate how well TNB uses its assets to generate revenue. The fourth ratio is referred to profitability ratios. These measure how well TNB turns sales into profit. And the last type of ratio is referred to market value ratio, which reflects investor perception in the stock market.
Good afternoon, my name is Enimu Jai, BB241106162. Today I will talk about the financial performance analysis of TNB in 2019. In 2019, TNB has a stable liquidity with current ratio 1.08 but high debt with 0.67 ratio. Profitability was decent with 8.9 net margin and investors were optimistic with PE 16.95 times. Typical utility performance, asset heavy but steady. Next is the comparison in 2019 to 2020. 2020 saw liquidity drop with current ratio fell to 0.96 and debt rose. Surprisingly, gross margin improved to 27% but net profit fell. Investors remain hopeful as PE rose slightly to 17.13 despite weaker fundamentals. The last one is 2020 versus 2021. 2021 brought slight improvement, liquidity inched up 0.99 ratio and debt stabilized. But profitability kept declining with net margin 7.6%, making investor cautious as PE fell to 14.36. Partial recovery but challenges remain. That's all from me. Thank you.
Hello, my name is DEXTER ROMUALD with number matrix BB24161138. Now I will present about TNB financial performance comparison between 2021 and 2022. First is liquidity ratios. Both current and quick ratios is improved. The TNB is now better able to meet short-term liabilities. Second is capital structure. The slings decrease in debt ratio. The times interest earned increase, showing better interest coverage. The number 3 is asset efficiency. Fixed asset turnover improve, showing better use the fixed asset. The total asset turnover drop, indicating reduced overall efficiency. And next is profitability ratios. Gross profit margin and net margin decrease. However, operating margin improve and showing better cost control. The last is market value. PE ratio increase slightly, reflecting stable investor confidence. And overall summary between 2021 and 2022 are improved. That's all from me. Thank you.
Hello, my name is KENNEY. IFFAT is a financial performance comparison 2022 versus 2023. Liquidity ratios, current ratio 1.198 to 1.238. Quick ratio 1.111 to 1.154. Stronger cash position and liquidity. Asset efficiency, total asset turnover 0.247 to 0.259. Asset efficiency, total asset turnover 0.247 to 0.259. Fixed asset turnover 0.436 to 0.435. Slight improvement in total asset usage. Profitability ratios, gross profit margin negative 16.1% to 3.9%. Operating margin 18.5% to 13.9%. Net margin 6.8% to 5.2%. Gross profit covered but operating and net margin decline. Summary 22 versus 2023. Summary, 2022 versus 2023, liquidity and gross margin improved, operating and net profit margin decline, focus on cost management and operational productivity.
Hello, my name is HAFEEZUR IFFAT bin RUSBI, matrix number BB241600956. I will be presenting on final summary and key recommendation. Firstly, liquidity ratios are improving, indicating better short-term financial health. However, debts level remain high, which weakens the interest coverage ratio and raises concern about the capital structure. Asset efficiency is stable, but profitability is under pressure due to rising costs and regulations. Despite the challenges, investor sentiment remains positive, shown by the rising PE ratio. However, competition is increasing, especially the renewable energy sector, which challenging TNB market dominance. Based on these findings, we recommend 5 key actions. The first key is strengthen the financial position by reducing debt to improve flexibility. Second, expand into renewable gradually, ensuring financial stability before heavy investment. Third, enhance operational efficiency due to boost revenue. Fourth, monitor and external risks like fuel price, volatility, and ESG regulation. Lastly, we maintain transparency by improving clear investor updates and sustainability disclosure. Thank you. That's all from me.
That's all from our group. Thank you.